Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets brace for a negative start amidst mixed global cues, somewhat weak for that matter, and also ahead of the RBI policy meet decision. Gift Nifty signals a subdued start coming in for Indian equity markets. RBI monetary policy essentially will dictate the trend for Indian equity markets going further. Central Bank, however, is expected to keep the repo rates unchanged, but the commentary on inflation would be keenly watched out for. Let's talk about what happened across the globe. Wall Street, for that matter, ended lower as investors await US inflation data. The US government is set to release the data on inflation. Asian pairs at this point of time are also witnessing some amount of pressure after Wall Street fell on concerns. Concerns over deflation in China also dented the sentiment. But let's talk about a bit of breather coming in from FIIs, which have finally bought in Indian equities for the first time in the last 10 consecutive sessions. They've lapped up equities to an extent of around 644 crore, and DIIs, however, have sold their equities to an extent of 597 crore for that matter. Let's talk about stock with highest delivery interest out there in terms of percentage. Britannia, Pidilite, HUL, Power Grid, and Infosys are some amongst them. Let's talk about the earnings that one would watch out for in today's session. Hero MotoCorp, LIC, Grasim, Biocon, along with All Cargo and Apollo Tyres, General Insurance Corporation of India, Indiabull Real Estate, Lemon Tree, Moscow Dock, Page Industries, and Pidilite, along with SAIL, will be reporting in their quarterly scorecard this session. Let's talk about FII trend in FNO. Well, there have been net sellers across the board. Talk about index futures to the tune of around 323 odd crore. Talk about index options to a tune of around 12,407 crore. Talk about stock futures, less than 2,000 crore. Talk about Bank Nifty futures, 594 crore. And also let's talk about Bank Nifty option. There also no respite. Sellers to an extent of 8,940 odd crore. PCR, a bit in the overbought territory, 1.17 versus 0.98. Talk about stocks under ban. What we have still in the ban: Delta Corp, Balrampur Chini, Hindustan Copper, Indiabull Housing Finance. What comes out of the ban is India Cements. Do keep an eye out on this one. Cement, thus far, the entire sector has reported steady set numbers. Let's discuss some stocks and strategies now with Chandan Taparia, Senior Vice President, Heads Derivative and Technical Research at Motilal Oswal. Chandan, good morning. How's the trade setup looking? It's an important day today. RBI policy meet out there. Qs globally have been weak. 19,600 mark was breached in previous session. What are you looking at? What's the strategy that you're going to advise to our viewers out there?
Good morning. Thanks for having me.
Pleasure.
So, in last few days, we have seen some recovery from 19,300 to 19,635, 650 zone. Before that, just a couple of days back, Nifty just missed to mark 20,000 zone, made the high of 19,991, corrected by around 690 points. But the good part is that recovery is also visible. So we are again stuck in a range. The key support is near to 19,560 for immediate point of view. Major support goes to 19,420. So if you ask me the broader range amid the volatile swings of the RBI policy, then level will be 19,420 to 19,750 marks. And in between, we'll use the buy on decline stance with support of 19,560 level. So I'm keeping three levels in mind to deal the market volatility in a broader range. So 19,420, 19,560 and 19,750. This is how we have to play the trade setup in the Nifty index.
And how about Bank Nifty? Any recovery seen for that index as well?
Yeah, so Bank Nifty got stuck in between support of 50-day MA and hurdle of 20-day MA. The good part is that from last 4 days, supports are slightly shifting higher. But the concern is it is forming a negative pattern on the daily chart. So because of that, we have to keep the major support near to 44.44, 44.444. If that level is broken, then you need to be cautious in the Bank Nifty. Otherwise, we have potential to head towards 45.350 kind of level. So as of now, I'll put the support near to 44.700 to play the buy on decline stance to move for 45.150 to 45.350. And if 44 is broken, then you need to be cautious for positional point of view in the Bank Nifty. So you must be hearing that we are talking about multiple levels, multiple setup. So this is how the market is. So immediate point of view, we are getting the range, but broader point of view, key setup is in process. So that's why we are worried for positional, but we are okay for immediate point of view in the Bank Nifty as well.
All right. Stocks like Suzlon, Zee Entertainment have come up with their numbers. Anything looks attractive within that space. NCLT perhaps is going to be giving in the decision on the Zee and Sony merger today. Do you see some of the traction building in for that one, or you think investors are better off without this counter?
So we have seen good recovery in last 5-6 weeks in Zee, and in fact the rollovers were better with better roll costs, and we have noticed the declines are being bought. So price setup is positive. However, because of the corporate actions, some sort of volatility could be there. But as of now, we believe that till it holds above 235 level, the stock has potential to rally to us 265 level. You ask about Suzlon, so again, we don't have coverage. Disclaimer is clearly, but technically stock is holding well. Major support is near to 18, and as per the price setup, stock can head to us 23 to 24 levels.
All right, that's the word coming in, but let's address some stocks and news for you ahead of the markets open. What we have on the list is Tata Power, Suzlon, Mart, BSE, Force Motors, amongst others. Axis Bank too makes it to the list. We're going to touch base with Chandan in just a bit. But Tata Power reported in numbers, revenue up by 5%. And if you talk about the EBITDA, it's up by 75% at a number of around 2,945 odd crore. Estimates were to a number of 2,655 crore. A big amount of beat coming in on the operational performance. Margins at 19%, comparable with that of 11.6%. So there's a bit of expansion there. Estimates were to an extent of number of 17%, and the delivered number is 19%. So a bit of beat coming in on the operational performance. Clearly good set of numbers reported by Tata Power. Zee Enterprises there. It's an important one. There's a ruling which is going to be coming in from the NCLT with regards to the Sony merger. A bit of issue which has been an overhang on the counter thus far. But most of the analyst community, especially the technical analyst community, has been a bit of bullish on this one. Zee Enterprises profitability take a hit of around 70%. Revenue up by 7.5%. Operational performance takes a hit too, down and out by 42.3%, and the margins have shrunk to 7.8% as compared to 15%. Of course, there had also been a one-time loss which has been reported to an extent of 71 odd crore. Let's talk about what we have in terms of Axis Bank out there. This is also an important development that we have. Board is approved in an infusion to an extent of 1,612 odd crore in Max Life through preferential allotment. Axis Bank direct stake in Max Life with this increases to 16.22%. It's a bit of development given how the stock has reacted thus far. Axis Bank also has the right to acquire in more 0.98% stake in Max Life. Total stake, of course, will be closely to an extent of around 20 odd percent. A bit of positive development coming in for Max as compared to that of Axis, because Axis entities will now acquire an additional 6% stake, and the entity already holds in around 13% stake in Max Life. Earlier deal was done at way less prices compared to this deal. It's a bit of negative for Axis Bank and a bit of positive coming in for Max Financial. Mart, another company which is reported in numbers, net loss has been reported as compared to a profit. Net loss to an extent of 22 odd crore as compared to a profit of 21 crore. Revenue for the companies are up by as much as 15.4%. Operational performance too doesn't seem to be healthy. It's taken a hit, 41% down. Margins at 7% as compared to 15%. Almost half of what they have reported in the corresponding quarter. Force Motor, well, a relatively small name out there, but splendid set of numbers. That is why it makes, it comes from our stocks and news today. Let's look at the numbers out there. Revenue up by 53%. EBITDA is up by 3.3 times, over 3 times. The number is coming at 180 crore as compared to 44 crore, or maybe just 44.78 crore to be precise, in the corresponding quarter. The margins have come in at 12% as compared to 4.6%. Net profitability has come in at 69 crore as compared to a net loss of 17 odd crore. So those are really good set of numbers. BSE again, weak set of numbers. But let's address the market open for you first, where we're seeing some amount of subdued start creeping into markets like anticipated ahead of the RBI policy meet and amidst weak global cues. 19,600 mark, way below that, a little bit to say below that, with losses of around 0.2% out there. Bank Nifty, let's see what's the trigger out for that one. Ahead of the RBI policy meet, rate sensitives are expected to be in focus, and Nifty banking index is doing no different. It's down and out with losses of around 0.2%. Let's talk about small cap and the mid cap index too, for that matter, just to see whether we're seeing some amount of outperformance coming in from mid cap index. And for small cap index, well, that remains to be seen, right? We've seen major amount of resilience coming from the broader counterparts, and small cap index is acting no different. Gains of around 0.2% out there. Let's talk about the sectoral indices that we have and the advances and declines. Right now, market breadth in the favor, it's equally divided. 24 advances, beg your pardon, 11 advances against 38 declines as per the updated figure. Market breadth in the favor of declines. FMCG down and out with 0.25% of losses out there. Pharma too takes a hit, but is some amount of resilience coming in for that index. Overall, let's talk about consumption, auto, banking, reality, essentially the rate sensitives, just to see how those index right now are spanning out. Something like an auto index and realty index rate sensitives essentially also should witness some amount of caution ahead of the RBI policy meet. Although the rates are expected to be steady enough, but whether or not the commentary will be something that the market likes or would be watched out for. Let's talk about the top gainers and the top losers that we have on the list right now, just to see where the momentum is. ONGC, Ultratech Cement, Adani Enterprises. These are some gainers that we have. BPCL and Adani Ports, DV's Lab. Essentially, it's the Adani group of companies which have made it to the top gaining list, along with Cipla, Coal India and UPL. Let's talk about the top losers that we have on the list. We have something in the likes of Hero MotoCorp, Tata Steel, HCL Tech, along with that of Britannia, Nestle India and Eicher Motors. These are some of the other top losers that we have. It's clearly Adani group of companies which have been doing well, and IT stocks which have been taking a bit of a knock out there. Chandan, come in on this one. What do you make out of something like Adani Enterprises and Adani Ports? A bit of traction which has been seen within the group companies. What's your suggestion out there? How are the charts looking for those two?
So usually I avoid to comment on the name because of the volatility. But the good part is now some sort of stability is clearly visible. Supports are shifting high. So one can look at the immediate support to place some swings in the market. Apart from that, if you look at the broader market, 19,560, we will watch a key support in Nifty. And I think if that holds, then these stocks could be in actions. And I think some sort of buying or short covering also could be here if the key levels are being respected.
All right, Chandan, also your view coming in for something like a Bharat Forge, where there is a contrary reports come in from the foreign brokerages, where one has upgraded and the other brokerage has downgraded the counter. Also, along with that, Axis Bank. What's your assessment on those two?
So, first, if I talk about Bharat Forge, we have seen a strong recovery on the last trading session. Stock rallied all the way to 890 to 980 kind of level. Today, it witnessed some decline, but I think major trend could remain intact. Let it correct further. I think near to 935, 940, one can buy for again potential to rally towards 990 to 1000 levels. You talked about Axis Bank. So if I look at the stock, technically banking stocks are in a range. Axis Bank is forming a small bodied candle. So no concluding move, range bound. 925 is immediate support. Upside hurdle is near to 980. So let it come near to the key support, then we'll play for the upper band of the trading range.
All right, for Suzlon, the company has launched in a QIP, which is going to be to raise up to around 2,000 odd crore. The floor price has been set to an extent of 18.44. The base overall for the QIP is at around 1,500 crore with an oversubscription option at 500 crore. What do you make out of it? Would you suggest a buy coming in for Suzlon?
Yes, already you asked this question and I reply, we don't have coverage, but so I'm not talking a disclaimer and disclosure will be there, but technically setup is clearly visible. 18 is the support. Stock can move towards 23, 24 as per the technical data setup.
All right, Chandan, we're just going to leave you at that in that case. Let's address the fundamental side of the story. Much needs to be spoken about because FIIs have finally managed to be the top, one of the buyers after 9 consecutive days of sell-off out there. But to take the discussion forward, we're being joined by Prakash Diwan, the market expert there for us. Morning there, Prakash.
Good morning. Good morning, Nickey.
All right, how is the day stacking up for you? Direction that you think markets are headed, some amount of solace coming in from FIIs. Do you think it's too much of a temporary trend to look into? What do you expect out of RBI? Which direction is the market finally headed? And what do you make out of the rate sensitives right now?
Yeah, so, good morning. Yeah, absolutely. It's a data heavy day, event heavy day, whatever you call it. And importantly, it also sets the tone for assessing what going ahead for the next month, 2 months is going to be like the mood in terms of flows and liquidity. My sense is the FI, buying would probably would need to happen a couple of more days to make it be convincing enough and not believe it's just a flash in the pan. Secondly, the RBI policy, while they have all things against any kind of a pause or softness or dovishness in the in the stance, I have a feeling the currency is something which they would also be worried about. The rupee is kind of likely to weaken much more if the spread between yields in the US and in India keeps expanding. And that's not something which is very healthy for the bond market. So if that were to happen, the currency could get a little bit of an impact, and they might be also worried about that, given the fact that we are now looking at higher crude levels, significant.
All right, we stuck with a little patchy video from Prakash out there. We'll try and patch it back. Prakash, can you hear us?
Yeah, I can hear you. I'm sorry, maybe the connectivity is a bit of a yeah. So the RBI policy could probably not be dovish at all. My expectation is it could sound hawkish. I know there's an outside chance that they might also hike rates, which is absolutely against consensus. Well, let's not get into conjecture on that. What it does is it takes the event out of the way, and which means that a lot of allocation will resume in the market. That's more important. And we are at very, very stretched.
It looks like we've really caught him on a patchy note. Remains to be seen if we can again patch him back. Enough and more needs to be discussed in terms of the fundamental story, especially the sectors that have been doing well. Auto thus far has reported steady set of numbers along with banking. A bit of surprise, however, is erupted from the pharma basket, which has been an undervalue, counter overall in terms of the valuation, in terms of the fundamental performance, in terms of the commentary that we've seen from majors like that of Cipla. Will they require a re-rating? Needs to be seen. But Prakash, can you hear us?
Yeah, I can hear you. Maybe it's my audio that's not reaching you because of the.
Okay, one last question before we let you go, because you spoke about RBI policy within the basket. Given the earnings season we've already done past with, which are the sectors which really have stood out, and within that stocks that you like the most?
So I think importantly, cap goods will continue to be fairly robust going ahead as well. The order book, the kind of margin expansion, pricing power seems all in favor of cap goods. I think you should stay away from cap goods associated with defense at this point in time, because there's a little bit of a run-up which is too sharp. They are ahead of their earning expectations. And the other pocket that could start yielding very good results going forward is pharma. Especially the larger pharma, the Dr. Reddy's and the Lupins and Sun Pharmas of the world, DV's Labs. I mean, there's some very good businesses which have started getting a reset given the pricing power that's coming back. So my sense is you'll probably have to do a bit of sector churn in your portfolio. Look at pharma, get back into maybe mid-cap ITs, especially products and solutions players. There could be some revival there. And the US recession may not be as fierce as what we anticipated or as soon as we anticipated, which means it'll probably have a soft landing, to use a cliched term. But yeah, I mean, that's where I look at, there will be some this thing, and consumption will still take another quarter to come up. But you could start cherry picking there as well, given the softness in numbers. So good numbers don't give you much of an opportunity. It's bad numbers which actually give you an entry point. And my sense is the consumption is giving you that, especially home improvement and discretionary small ticket products. So that's where we are looking at some value. We would continue to build portfolios around that.
Prakash, one last question that I have in mind is A, for Suzlon, where the capital raising announcement has finally come through, and B, for Zee Enterprises, where NCLT is going to be finally coming up with apparently an announcement for the merger coming in for Sony. The numbers reported thus far have not been great set of numbers. How would you treat these two individual counters?
Let me take Zee first, Nickey. Zee, we've seen delays happen in the NCLT decision for quite some time, and if it were not to get delayed, and actually some outcome is expected, or it actually happens, and if it's, let's say, on the positive side, favorable side, you'll probably see a very quick rally there, because everybody is kind of waiting to get into it. But beyond that, fundamentally, you'll have to give it at least a year or two for the merged entity to start throwing cash flows which are robust, which are meaningful. So there'll be a lot of time that will take. So it's just that 20-25% of a pop-up that you would probably see from the favorable outcome. If it doesn't happen, or if it's not so favorable, of course, you probably see a little bit of a downside, which is restricted. So the risk reward is in favor of traders, but you need to be very nimble to be able to do that. On Suzlon, I think this was anticipated. They've seen the price come up. They're raising money without too much of dilution. Of course, 8.6% is not too small, but at least the benefit that it accrues to them in terms of shoring of the balance sheet is far better, far bigger than that dilution at this point in time. But I'm not a big fan of Suzlon at this point in time. If you had to buy turnarounds, you would have to do it much before the market does. This is a tad late for it. So let the company, raise money, pay off debt, start getting streamlined, shore up the balance sheet, see profitability come out of that, which is another maybe 6 to 12 months. Then you could re-look at Suzlon from a fresh perspective, not from a turnaround. It's no more a turnaround. It's already turned the corner. Now you'll have to look at it being profitable like any other business.
All right, Prakash, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
My pleasure.
All right, during the last MPC meet in June, the repo rate was left unchanged at 6.5% for second straight meeting. The central bank has now raised repo rates by almost a total of 250 basis points since May 2022 with an aim to tackle inflation. What will be delivered this policy meet? Let's try and find the expectations from Dinesh Unnikrishnan, banking and finance editor for Moneycontrol. Good morning there, Dinesh.
Good morning, Nickey.
Right.
Thank you for having me on the show.
Pleasure is all mine, Dinesh. I'm going to start off by asking you your assessment. What do you expect from the central policy meet this time around? Will be delivered or no repo rate, or you think it's going to go against the consensus and probably deliver a hike given the kind of inflation that we are witnessing right now, especially the food inflation?
Well, Nickey, as you rightly said, the larger consensus is that there won't be any rate action today. The reason being, there were two phases for the MPC's inflation fight. One, to initially bring it back to the 2 to 6% band, which has happened over the last few months. Inflation is comfortably below the 6%. The next phase of this fight is to align the inflation closer to the medium-term target of 4%. So inflation has been, that is still some time away. After three months of fall, inflation CPI has increased to 4.8 in June, primarily triggered by the vegetable prices and other food items, etc. But I would imagine that MPC will continue to wait and watch, give it some more time for the earlier rate actions to play out and to assess the impact. So largely, I would expect a status quo today with some hawkish comment, some caution on the recent resurgence on inflation, particularly in vegetable prices.
All right. So apart from the stance, would you also want to view the underlying commentary coming in for inflation, or are your expectations out there, given the kind of surge we've seen, like you mentioned, in also one of your very refreshing piece out there, letter from humble tomato to the RBI governor, given the spike that we've seen, a commentary even on those levels?
Yes, Nickey. So on the stance, that's something we'll have to wait and watch. The policy stance has been withdrawal from accommodation which has been continuing. In the sense, post-COVID, the RBI had relaxed the policy. There were rampant back-to-back rate cuts. So withdrawal from accommodation means, unwinding those rate actions, which has happened from since February 2000, May 2022. Sorry, the RBI has increased the rate by 250 basis points. So in a way that withdrawal from accommodation has already happened, with the repo rate now getting back to the 6.5% level. So that is about the stand. There is a division among the MPC members whether that stand should continue or not. And as far as the inflation target is concerned, in the last policy, RBI had actually lowered the FY24 inflation target a little bit from 5.2 to 5.1%. But, things have, I would say, kind of drastically changed on the price front since the last policy. That is because of the, a surge in vegetable prices, and there are upside risks because of the likely impact of El Nino on the monsoon. Also, there are global factors that are playing out, as well as the excess rainfall that has happened across north has actually, disturbed the supply chains, which has somewhat added to the, prices of vegetables and other food items, etc. So this spike in price levels may prompt the RBI to relook at their inflation target. That is my assumption. We will see in some time. So there is a possibility that the RBI may increase the inflation target from the previous level, factoring in the recent spike in the price levels. So I would expect one is to watch out for the inflation target, while there won't be any change in growth as well as in the rate stance, in my view.
All right, so targets is one that you need to keep a close eye out on. No changes per se is expected on the policy rate front, but if they were to take place, how does the policy actually affect an individual in that case?
So today, if there is no rate action, it wouldn't be an event for the common man, because banks have already factored in a status quo in rates. They have most banks have actually increased the deposit and loan rates in the recent months. So today, if there is no rate action from the Reserve Bank of India, it is very unlikely that banks will do anything on their lending or deposit rates. Now, going ahead, most of the economists expect a rate cut by the start of the next year, by when the inflation is expected to cool down sustainably, aligned to the 4% target. If that happens, if inflation sticks to the projections, then we may see a rate cut early next year, which then could benefit the borrowers by way of lending rate cuts. As of now, I don't think anything is going to happen at the consumer end.
All right, Dinesh, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you. Thank you.
All right, with this, it's a wrap. And goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.